Investors have been worried about a potential artificial intelligence bubble, with lots of stocks in that sector running up tremendously this year. However, our guest is not in the bubble camp. We're joined by Matt Kacur, president of FSA Valuation Service. Matt, great to see you. Thank you very much for joining us.
Hey, Andy, thanks for having me.
So the massive spending, for example, on data centers and AI equipment, tens, even hundreds of billions of dollars planned over the next few years. You're not worried that companies are overdoing it?
Well, it depends on which companies you're looking at. So like the hardware guys like Nvidia, TSM, Taiwan Semi, I mean, there's the one that they're spending the money on. Right. So I don't feel that they're in a bubble at the moment. Like, they're making a lot of money. So, for example, Nvidia just released their quarter not that long ago, 62.5% revenue growth and 61% EBITDA revenue, or EBITDA growth, excuse me, and trading at 34 times. That doesn't sound like a bubble to me. Now, you do see some weakness in some of the software companies, because maybe they're the ones, spending the money and getting a little bit nervous that they're going to overspend. But I just don't overall see a bubble. I see kind of more warranted values. And I know if you look at the stock charts, I would say, yeah, it looks pretty scary, right? If you look at Nvidia's stock chart for like a 3-year basis, it's up quite a bit. But the fundamentals are there to support it. So that's kind of where I'm at.
What about Google? Google has been in vogue among investors. It turns out, for now anyway, their search business isn't being annihilated by AI. Is that a stock you'd buy right now?
Oh yeah, we love Google. Similar number, well, not quite as much growth, but 15.9% revenue growth in the last quarter, 15.7% EBITDA growth, trading at 19 times. And no, I don't think search is a big problem for them. They have an opportunity in AI as well. Like, they have their own products. It'll only enhance their search. I mean, it's a remarkable company. I wouldn't back off of that one at all, despite the huge run-up. I just don't see it as expensive. And I see the AI as more of an opportunity for Google or Alphabet. Yeah.
There is some evidence, though, emerging that these gains in productivity from AI are going to be slower than people had hoped. And companies are pushing back, apparently, at Microsoft when it comes to paying for AI tools. I know it's very early days. We're just in the Paleolithic era with AI. But is there a risk that expectations have been overdone and that corporate profits won't get the huge boost that people hope for?
Yeah, I think that's very fair to think about those sorts of things. And I think that's possible. We can't grow at these kind of rates forever, even with this type of innovation. But it's not a bubble, right? Like, it's just a normal cycle. Maybe you can't quite get the revenue that you thought you were going to get, or maybe you're going to spend a little more than you really would have wanted, or investors would have wanted. But that's kind of just normal business cycles. So I just want to stay away from that word bubble. Sure, pullback, maybe overextended, a little less harsh of a word than bubble.
What about Oracle? That stock soared and then fell. Would you be a buyer of Oracle now?
Yeah, so that was kind of an example of, if I saw more stories like that, I'd be more in the bubble camp. So CEO came out, Larry Ellison. Nothing against Larry Ellison, nothing against Oracle. I think it's a really good company, and they do have a tremendous opportunity. But it was a really, really kind of overhyped rhetoric that he put out there. So Oracle stock on that day was up 42%. The stock went to $345. He was saying his projected revenue growth of 77% in 2026, and to get to 144 billion in 4 years. To give you some perspective, their revenue growth previous to that let me read off of last few years. 42 billion in 2022, in 2023, 49, 2024, 52 billion, and 2025, 57 billion. So 57 billion was growing around 8%. And now we're supposed to believe just because of AI, it's going to go to 144 billion in 4 years. And the stock jumped 42% on the day. That's kind of bubbly, kind of, talk, right? If we saw more stories like that, that's one kind of isolated story. I'm not seeing that across the board. So, and nothing against Oracle. I think Oracle's actually quite a good company. I just thought the stock kind of got ahead of itself after that rhetoric, and I'm only seeing that in isolated incidents.
We're tight for time. You are bullish on gold, and Aura Minerals is a name that's caught your eye. Just tell us what the attraction with Aura is, please.
Yeah, so we're mostly like a modeling the financials shop, so we don't get too deep into the weeds on the mineral deposits and things like that. And we just see a tremendous return on capital improving quarter after quarter, just staircasing up. And the value looks to be there. I think I had a multiple on here, was around 10 or 12, I think 10% here of EV/EBITDA. That's our favorite multiple. We don't use PE. And I just think gold overall is bullish. I still think, people are buying gold over U.S. Treasuries. So I still think you got a little bit of runway. And the gold can, by the way, stay at this level. And I think companies are very, very healthy. So their stocks can move up even if gold does not.
Oh, okay. I don't know if we have the chart right now for Aura Minerals, but it's AUGO in U.S. trading.
That's correct.
Thank you very much indeed for joining us, Matt.
Anytime.
Matt Kacur, president of FSA Valuation Service.